Good morning, everyone. This is Daily Trading Analysis with the weekly recap for a 6% week on the NASDAQ and the ES. Bulls are pushing from a very interesting technical area, and not only that, we have some good earnings from the tech big giants. So this is not only about tariffs, this is also about short-term earnings expectations, and overall, those are pretty good, but Tesla missed big time expectations. Market sentiment, it's, I would say, pretty balanced. We have really bad data on the existing home sales being stagnant at 4 million. This is pretty negative because it suggests a cooling housing market which would overall impact economic activity. We have also the US durable goods with 0%, and also the final reading for the Michigan 1-year inflation expectations, which are also being pushed higher. Not as higher as expected, but they are still negative. Overall, the fundamentals on inflation, on tariffs, existing home sales, economic growth, spending, everything is pointing towards the downside. But then we have the big tech earnings. We had Tesla missing big time, but despite that, 5% on that earnings release. Then we have Google, Intel, IBM, and Boeing and American Airlines also pushing the earnings, beating both EPS and revenue. Oh boy, these are pretty good earnings. And we are going to see on Wednesday, Microsoft, Meta. We are going to see on Thursday, Amazon, Apple. Don't forget about Tuesday, Visa for economic spending. We have Coca-Cola for consumer discretionary. We have Spotify. There's a pretty interesting and volatile week ahead. So don't miss those out because those are going to really change the sentiment day after day, the same that we had this week. So overall, as I was saying, this is pretty balanced. We have the trade war, particularly with China. This remains a significant headwind. Trump's stance on tariffs is creating uncertainty and market volatility with every single comment, every single tweet. The market pushes both sides. It's really risky right now to have big positions. But I would say that my last week's weekly recap was pretty good because we identified a pretty interesting point on the 200 moving average on the weekly chart, and then a 1-hour opportunity that we are going to review into the technical side of things. But we have also some news from the IMF increasing the probability of a US recession in 2025. And also, some Fed officials worried about the impact of tariffs. Adding to concerns, the Fed surveys saying that the prices remain high, inflationary pressures persist, University of Michigan. I mean, there's a lot of things going on right now, but overall looks like the market is only focusing on earnings. So let's go ahead and review the technical side of things because this is the weekly chart and we've been just ranging in this side of things with a top to bottom of 15%. So we are right now in the middle of the range between highs and lows. We are right in the middle, right here. So this is a time in which we have to really pay attention on what is happening. Are we going to reclaim higher? Are we going to bounce back and bulls are going to commit again? This is a pretty interesting spot. I don't think we are going to see significant upside unless a pullback. If we change to the daily, we can see how things are really, really dangerous. This is a big spot in which we had a pretty big day on the pause on tariffs, 11% on early April. And right now we started the week with kind of a gap here. So we have a gap here, we have another gap here. This is the 1 hour that I was talking about, but in terms of the daily, we have this inverse fair value gap, and there's the daily moving average, the 200, coming along with the 20,600s. Right now, we are 500 points below the 20,000 mark. The 20,000 mark, it's more or less at the top of this inverse fair value gap. So this is going to be pretty interesting. But let's go back to the 1 hour, because oh boy, it gave a lot of opportunities. I was trying to leave a runner, but I didn't feel confident. But I was right. I mean, sometimes you are right, but you don't feel it, so you don't actually commit to the trade. So this is the framework. We had the 1 hour fair value gap really big from the past tariffs. So people is defending this, but this is a 6% drop. 6% gap on the 1 hour, which is pretty dangerous for the retail sales. I think big players are really buying this market. If we see the market internals, this is the ES, we can see how the week started Tuesday, Wednesday, Thursday, really big on volume and really big on advanced decliners. And the Qs pushed by the expectations on earnings were even higher. Look at Tuesday with Google's earnings. Huge volume, 500 or even 600 million in terms of volume inflows. This is crazy. And also topping the advanced decliners. This is also being shown on the RSP. The RSP is really, look at the momentum. Look at the momentum. Momentum is shifting, spiking higher. We are right now in a top of the range, but there's clearly momentum for the earnings. So let's see what would happen. I think in terms of push, we had a pretty good push of 10%. So I think we are going to need some kind of balance to the downside, and then watch very closely how things develop, because here we have a gap which I think is going to be defended. Within that gap, we have this sell side liquidity, and then if we look to the upside, we can clearly see that we have this push right here. Let's mark the last week high and low so we don't miss those. This is last week high, this is last week low, and then on the daily we are in the middle, so we have a gap down here. And let's go back to the 1 hour to see we ended the week with the last week, with the high of the week. So we have a range of 2.33% until the buy side liquidity. So in this range, from this gap to middle of the gap, we are also coming to the top of the range. So I wouldn't like to trade up here. I would prefer to go down and find some kind of balance. The same way we did here. Last week on the weekly recap, I was planning to have this kind of setup, and this played perfectly. So this time I'm not going to rush. I'm going to watch closely to see if we can have exactly the same. So basically this 1 hour fair value gap is my point of interest. The last stance to buy is this buy side liquidity. This gap, I would like to see the middle of it. So this is basically my play. I would like to buy here, or I would like to buy here. Certainly there's a lot of range until the 20,000 mark. I don't think we could perfectly go directly to the 20,000. I wouldn't buy this either. So as always, I'm very conservative in terms of buying dips in this market. I prefer buying lower and miss the opportunity rather than buying higher and enter drawdown and enter a bad position in which I have to average down or things like that. So this is the framework. We are pretty bullish in the 1 hour. We are pretty bullish on the daily, but there's too much spike. We have earnings. So Monday, we don't have big earnings. Tuesday, we have Visa, we have Snapchat, we have Spotify, Coca-Cola, PayPal, UPS, a lot of consumer discretionary. So this day would be pretty interesting to set the tone ahead of Microsoft, Meta, Amazon, Apple. I mean, if the market is focused on earnings, we should focus too. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload weekly recaps like this every Saturday in which we review everything from the fundamental to the technical. If you are new, welcome. Give me your comments down below. If you are coming back to this channel, thank you for the support. And remember that discipline, patience, and risk management are key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.